Hey folks, Dan Frio here, the rate update. Today we're going to talk about the little rally that we're seeing in the MBS market. The good news there is the rally means rates are going to come down a little bit. So in the news today we have oil prices, inflation, and China COVID. That's what we're going to discuss next and how that's going to affect or is affecting the markets. So if you're new to the channel, my name is Dan Frio. I do the rate update every day to inform you guys and educate you guys on everything real estate, especially when it comes to your financing needs and the options. Okay, so that's what we're going to talk about next. So let's get to it. Okay, so you should be subscribing to my newsletter down below in the description, where you're going to see what's going on in the market. So this morning so far, we have a nice rally going on, as I just stated. And the biggest thing is we're watching is the China COVID lockdown, oil prices, and inflation, because oil is one big element of the inflation front. So let's go over to the economic calendar though. So the news that we have so far today is durable goods orders came in. They're almost double what was expected. So the previous month was minus 0.5, terrible number. Then they expected it to be up 0.6. It was actually up 1.1, so almost double what was expected. Consumer confidence, right in line, basically. I'll take that all day long. And then new home sales, 835,000 last month. The expectations was for 765, and we came in at 763. So I'll say that is a go. All right, so let's break all this down. The headline news that you're going to see is this: home prices continue their increases. Okay, home prices increased 19.8%. from February of last year to February of this year. That's the one thing we're just going to focus in on. The biggest areas that are just going they're going bonkers is Phoenix, Tampa, Florida, and Miami. So basically 30% returns there. So I won't keep diving into that. I'm just showing you what the headlines are. So let's go over to crude oil prices. So that is a big component of the inflation front. So let's just focus in on that just briefly. What's that doing right now? It's at 99.54. I like this as long as it's below 100. That's going to keep a lot of things in checks. But here is basically the 1-year chart of oil prices. You can see down in this area here, we're basically in the 60s. Then we basically doubled. And now we're coming back down to just about a 50% increase from where we were about a year ago. So it's up, but it's coming off of its highs. We like that. The COVID in China, here's a chart that I just found. This is the number of COVID cases that were there. As much as you can trust this data, we go along here and it's good. And then all of a sudden, here's the spike that we're seeing. Okay, so there is a big spike. Is it running out of control? Only time's going to tell. And will we ever get the truth? Who knows? So now let's get on to why you're here. You're here to see what's going on with mortgage rates and why. Okay, so we're seeing right here, MBS market is up 25 basis points, 0.25. You're seeing that right in here. What does this mean? Let me just break it down. This is what's going on with the MBS bond that trades on Wall Street. That is the biggest component of the mortgage rate. So we take that yield, and we add in some profit margins and some what we call LLPAs. And if you don't know any of that or what I'm talking about, check out some of my other videos that I do. So that'll explain that. But as this number goes down, the price of this bond goes down, mortgage rates go up. The nice thing we have here is we're up 25. That means rates are going to ease down a little bit. But also down in here, we see the trend for the day is very or significantly positive. So how's that reflecting in mortgage rates so far? Well, basically, so far here is what we see, and this is based on last night's close. All right, so or today's opening. So let's break this down. I'm going to go over it with my lingo, so if you don't understand this, you'll get it over time, or check out one of my previous videos. So we have the 30-year fixed rate coming in right now, down 13 basis points, so over 1/8% in 1 day, coming in at 5.32. Just to make sure you're clear, these are not my rates. These are the national averages we just use as a benchmark, okay, to give you an idea, such as the Dow Jones. If you want to see what's going on in the stock market, what's the Dow Jones doing? But does that reflect your actually stock? No, but it should give you a representative of. Okay, so we'll go across here. That's where we are today. We are slightly off the 52-week high, and you're going to see that all the way across the board because we hit the 52-week highs within the last 48 hours. We have the 15-year coming down. It's down 7 basis points right here at 4.75, coming in with a cost. FHA/VA/USDA, the government programs, coming in at 4.9, down 10 basis points. 30-year jumbos, 4.52, down 10 basis points. And the 5/1 ARM is down 11 basis points, all the way down to 4.19. Again, the trend down here is positive or significantly positive. So that means rates should not really go up today, but we never know. Like the Dow Jones yesterday. At one point it was down 200 to 300, and then it was up 200 to 300. So crazy times, crazy days. So if you want to find out more about me and my team, go to therateupdate.com. And we're a mortgage broker, one of the largest mortgage brokerages in the country, where we can help you guys all over the country find financing for your mortgage needs. And there's a lot of ways you can get a hold of us. You can go up here, give us a call at 844-775-5626. You can apply online. You can book a meeting. You click that. It will open up a calendar. You select the day and time and how you want contacted, via phone, via Zoom, however you need to be contacted. We will make sure that happens. And if you want to chat while you're online, look who's up next. If you want to start a chat right now while you're watching this, I might be the one up next that you'll be speaking to. So that's it for today, guys. Thank you so much for watching. Thank you for taking the time. Don't forget to give us a thumbs up, subscribe down below, and hit the bell every time we post a video. You get an alert. Take care. I'll see you midday at the midday luncheon report.